What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you smash that like button. I'm going to give you an update on my dividend portfolio. I know I did post a video. Actually, some dividends came in late, and I received a total of actually $344.20 compared to the previous video. So the dividends came in late. Actually, something really weird happened. There's a nurse practitioner I used to work with, and she was in cardiology. She found me on YouTube. I mean, she kept it confidential, and I had no idea she was a dividend investor. And I thought that was pretty cool that she's been following my channel, and I had no idea. And pretty funny. It's a small world. But, the hard work's paying off. And I tell you what, graduate school, anything that can go wrong will go wrong in nursing school or nurse practitioner school. I've been told that. I've seen it happen, and it's complete chaos right now. So I'm trying to keep my mind fresh at a good leg workout. It's big exam week. You can tell I'm heavily caffeinated, motor mouthing. So I'm going to take it one day at a time. I'm going to post videos. I'm going to enjoy posting these videos for you guys, and it's exciting to see you guys grow as investors. I bought a new stock to my M1 Finance dividend portfolio, and I'll go over that one. So let's check these stocks out right now. That first dividend stock is Huntington Bank shares. It's sitting at 15.56. And as I told you guys before, I want to get to 100 shares of these guys. So this is one I'm really going to load up in February. I'm going to try to get to 100 shares, possibly at the end of this year. Dividend yield is 3.98%. The PE ratio is 17.37. The volume is 13.31 million US dollars. The market cap is 22.51 billion US dollars. Year range is 1301 to 1779. Kudos to you if you got the dip when the pandemic hit. Day range was 1499 to 1561, and its previous close was 1506. So looking against the S&P, these guys are taking a hit since the pandemic, and they're slowly trying to get back to where they were. But there's dips, there's up and down. It's just not keeping up on the S&P, which makes them as a very attractive dividend stock and a cheap dividend stock, less than $20. And their revenue is fantastic, which I'll go over. Revenue-wise, they've been fantastic. And banks usually make more money every year. I'd be very surprised if they took a big hit, because looking at the way these guys are going and their trends, that's very attractive. Now, again, you can play the pandemic card in 2020. Revenue, this is in millions of US dollars: 2,955, 3,154, 3,782, 4,170, 5,270, 5,655, 5,238. So play the pandemic card right here. Okay, I'll let that one slide. And looking at everything, it's going up. And what's very attractive, not only the price, is its dividend hikes and its dividend history, which makes these guys a very attractive dividend stock. Look at this: 2013, 5 cents; 2014, 6 cents; 7 cents. Right there in 2016, 2017, 8 cents; 11 cents; 14 cents; 15 cents. And it's 15 basically and a half. So it has a PE ratio of 11.07. So the dividend growth, again, I like growth. Okay, I like increase in dividends. You want to be around, like I said, I made a post too. I'm just going to read what I said on Twitter. So make sure you follow me on Twitter as well, Darth Dividend 23. So I said, I like my dividend growth stocks / companies like the people I affiliate with. Reliable, growth, successful, driven, positive, motivating, strong-minded, and who I love. Okay? That's the thing. This company follows all the things I'm liking about it. It's a dividend growth stock. It's increasing its dividend over time, and it's cheap. Again, look, 2022, 15.5 cents. 2016, 8 cents. So you're seeing the dividend growth, which makes these guys very attractive, and their revenue is going up. Let's jump to the next dividend stock. And guess who added this stock to their M1 Finance dividend portfolio? This guy right here. Ares Capital Corporation, ARCC, okay, is the symbol. You guys wanted me to do videos on them. I studied them a lot, okay, before I pulled the trigger on them. Their dividend yield is 7.41%, a PE ratio is 6.17. The volume is 4.19 million. The market cap is 10.43 billion US dollars. The year range is 1721 to 2235. Its day range is 21.88 to 22.18. So we need to look a little bit into these guys before we make a decision, and why I made a decision. I'm going to tell you why I bought these guys. So let's go over these guys. So the first thing is they're a market-leading business development company delivering comprehensive financing solutions in middle market. So the big thing is, okay, you got a business development company. Remember, real estate investment trusts and business development companies, 90% of what they make come back to us as investors. What is in their portfolio? Because you have to be careful with them. That's why I, buy Main Street Capital. I'm very careful with certain type of business development companies because some can blow up in your face. Prospect Capital, Capitella Finance. I haven't heard Capitella Finance or seen videos on those in a long time. And that was a really good monthly dividend stock that people liked. I wouldn't say good, but it's a very attractive dividend stock that people liked. So let's go over the portfolio on these guys. As of September 30th, 2021, Ares Capital Corporation has a fair value of approximately $17.7 billion, consisted of 371 portfolio companies backed by 188 private equity sponsors. Ares Capital has a diversified portfolio in terms of insurer concentration, asset class, industry sector, and geographic representation. So here's what they have. So here's their geographic composition. So the Midwest, West, Southeast, Mid-Atlantic. So here's their industry composition. They're very transparent, what I like about these guys. Software and services, healthcare services, commercial and professional services, insurance, diversified financials, a senior direct lending program, capital goods, consumer durables and apparel, automobiles and components, power generation, consumer services, energy, media and entertainment, food and beverage, and other 7.7%. Senior direct lending program. And here's some of their stuff: the issuer concentration composition, the asset class. So here's a lot of the things: the senior secured loans, a second, first and second. Some of this stuff is very interesting. So the DFS holding company, they have just so many things that is very attractive about these guys. So how is their revenue? That's the big thing that people want to understand. Business development companies, I like revenue. They're not making money. I don't want them. They're stagnant. You got to be careful. So let's check these guys out. Okay, so here's the thing that's very attractive about ARC, or Ares Capital Financial. This is in millions US dollars. So 989, 1025, 1012, 1160, 1337, 1528, 1511. Okay, you can play the pandemic card, but from 2014 to 2020, there is an increase in revenue. In business development companies, you have to be the real deal. And Main Street Capital is probably my favorite business development company. These guys appear pretty good. I'm not going to say strong, but they're pretty good right now. In the long run, they could be strong. Again, this is not financial advice for entertainment purposes only, disclaimer in the description, but I really like the way things are running with these guys, their revenue and their trends, and I'll show you their dividend history. So here's 2014. They were 38 cents. 2018, 39, then 42. Then they hit 40 cents. Then they're back to 41 cents. So for 2214, with a dividend yield of 7.42% and a PE ratio of 6.17 and an annual dividend of 164, I don't know how their dividend growth is going to be in the long run. I can't guarantee anything, and they can't guarantee anything, but their revenue is increasing. So that's the one thing that's attractive about these guys. And, you see right here, 2019, they hit 42 cents, then they're 40, then they're jumping back up. Looking at these trends, it seems attractive right now. So they hit 43 cents in 2015, then they're 38, 43, but they appear, based on their revenue and their trends, that they're making a comeback. So I'm going to take the risk in buying these guys. And I'm going to jump to one more dividend stock that's a high yield dividend stock that I really like, and I also have in my M1 Finance dividend portfolio. And this one's another high yield dividend stock, PMT, PennyMac Mortgage Investment Trust. 1762, a dividend yield of 10.67. The PE ratio is 13.34. Volume is 997.36K. The market cap is 10.73 billion US dollars. Year range was 1657 to 2153. Its day range was 1738 to 1797. Previous close was 1782. So there is a dip right there. Holy cow, if you got that dip right there, kudos to you. When that pandemic hit at 736, oh, be racking up some dividend income. So here's the thing. Let's look into these guys real quick. The PMT is a specialty finance company that invests primarily in residential mortgage loans and mortgage-related assets. As a real estate investment trust, our objective is to provide attractive risk-adjusted returns to our shareholders over long term, primarily through dividends and secondarily through capital appreciation. Okay, so here's the thing. Their investment focuses on mortgage-related assets that they create through their industry-leading correspondent production activities, including mortgage servicing rights. In correspondent to production, we acquire, pool, and securitize or sell newly originated prime credit quality loans. Our interest rate-sensitive investments include the MSRs, mortgage-backed securities, and related hedge instruments. Our credit-sensitive investments primarily consist of credit risk transfer investments related to loans sourced through our correspondent production that we deliver to Fannie Mae. Okay. Big talk, big talk. Are they walking? Let's check that out. And I'm going to tell you, these guys are talking and walking right now. So 2014, this is in millions of US dollars, 442, 373. 421, 469, then 526, 786, then 740. You can play the pandemic card. Their revenue is jumping up like crazy, and they're $17. So Arbor Realty Trust, ABR, and PMT look very attractive. Of course, I'm long on Arbor Realty Trust, but PMT is looking pretty good right now. I'm telling you, this is why I added them to my M1 Finance portfolio, and I'll show you their dividend history. So at the start of 2015, they're 47 cents. Now, again, this is probably not a dividend growth stock completely, but just I added these guys because, the distribution is pretty hot right there. 47 cents, right here is 25 cents and it hit 40 cents and 47 cents. But looking at the trends, that's very attractive right now. You can claim it's a yield trap. It may be. I'm a risk taker. It's 1750. The PE ratio is 13.5. And the annual dividend is 188. The dividend yield is 10.84%. So here's the thing. I'm going to load up in these guys. ARC, EMT, and then Huntington Bank shares. I'll have my E-Trade dividend portfolio. I have an opportunity to use these EMT and ARC to buy my monthly dividend stocks like qyld, ryd, and xyld, and then qyld and ryd and xyld will buy my quarterly dividend stocks, and things are just really going to start kicking in. And I'm telling you, I'm made 300 plus in dividend income, which is insane. So this is why I'm parking my money, reinvesting my dividends, and just growing, because I'm pretty excited. I may hit 400 this year. And think of what you can do with $400. Just getting $400, and reinvesting that. And it's exciting with the dividend snowball effect. So let me know what you think of this video. If you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. What do you think of these three stocks? And again, I apologize. I'm motor mouthing because I'm chugging coffee, and I'll probably be up till about midnight, 1 o'clock studying for an exam. And it's just exam week. It's just complete chaos. Like I said, anything that can go wrong will go wrong in nursing school, and did an accelerated nursing. It's like deja vu 10 years ago. Everything is like deja vu. It's crazy. But I can hide here and post videos for you guys and work out and do that. So, best way to keep my mind fresh. So take care and have a good one.